Welcome to Bloomberg Markets. I'm Shanali Basak, and the S&P 500 is slightly higher after the latest economic data shows the U.S. economy is still holding up while leaving room for the Fed to cut rates. Let's get a check on these markets because you do have that S&P higher, but it has been down on the weekend. Interestingly enough, we are now actually losing a little bit of the bid here. We're having most of the sectors in the S&P lower on the day, so not too surprising here that the broader index is now following that momentum. NASDAQ 100 now 0.2% higher still on the day. The two-year yield hanging out at around 391 on the day. A little bit of movement there, and in the 10-year now below 390, now at 389 on the day. Remember, markets still largely on hold for that economic data next week. Let's look at some midday movers here on the equity side, though, because we're hearing a lot about the consumer. Starting with retail here. Lululemon, Ulta Beauty, both lowering sales outlooks. Lululemon fluctuating all day really here, now up about 0.2%. They're seeing increased competition and inflation hurt demand for yoga pants. And Ulta Beauty affected more by U.S. consumers cutting back on makeup and cosmetics. Both companies citing higher pressures dampening demand, but Ulta still down 2.8%. Remember, that was a stock Berkshire has recently gotten into. Now, looking at tech, Intel moving higher after a Bloomberg report said the company is considering splitting off its foundry business. Intel's longtime bankers, Morgan Stanley and Goldman Sachs, have been providing advice on the possibilities, which could also include potential M&A. And off the news, you do have Intel now up more than 11.3%, really rising throughout the course of Friday's trade. And Marvel shares rising amid relentless AI hardware demand. It's also reporting earnings results that beat expectations. Analysts responding positively to the report, spurring target price upgrades already, and you have the stock up more than 10.7% on the day. Staying with AI, another big story we've been following is OpenAI's latest funding round, which has drawn interest from three of the most valuable tech companies, Apple, Microsoft, and NVIDIA. For more, we're going to bring in Bloomberg Technology co-host who has been in the heart of this story. So really the perfect person to talk to about this and many other things. But Ed, can you explain a little bit more behind this funding round here? Besides Thrive Capital here, what else are you expecting from the biggest players in this space, the big tech companies?
Yeah, I mean, OpenAI needs money. Training the largest large language models requires compute, it requires talent, and that's the short of it. The NVIDIA component is interesting. $100 million, according to our sources, is what they're thinking of. It's talks, it's not a done deal, but for NVIDIA, that's a drop in the ocean. Just consider the story in aggregate. You know, OpenAI's best and biggest models are all trained on the H100 anyway. But NVIDIA probably looks at all the names circling around OpenAI and goes, well, it'd be good to be a part of what's going on, right? To kind of know what everyone's intentions are here and have a seat at the table, so to speak, though there's no reporting to suggest they'd get any kind of board or board observer position.
And at the end of the day, what are the regulatory concerns that might exist for some of the largest tech companies being even more involved with OpenAI?
Well, it was particularly interesting in Microsoft's case. As you know, we've reported and various regulatory bodies around the world have disclosed that they were examining the relationship between Microsoft and OpenAI. But the cap table around OpenAI is now, or would be, more complicated if you also have Microsoft's peers, Apple, included in that. I don't know how antitrust regulators would look at that, for example. The point is that OpenAI probably still is the world's leading and most important developer of large language models, and now more broadly generative AI and enterprise tools. And that will always draw attention. I think we wait and see how this round goes and kind of what the net result of its already complicated corporate structure or operating structure is, and go from there.
Quickly here, Ed, at the end of the day, what does this mean for the other companies out there that are not OpenAI, that perhaps are not getting the same type of corporate interest?
Yeah, look, Apple is not a developer of large language models. It has some R&D where it's training its own models, but it looks to third parties. And indeed, Apple Intelligence is built on other foundation models from the likes of OpenAI. That's a well-reported story by Mark Gurman. So its interest is different. And it's so common, be it the cloud providers or the mega cap tech names, to have a financial relationship with those whose technology on which they're relying. You know, think about AWS and Anthropic in the context of Bedrock, for example. So it's almost kind of par for the course of what's happening right now in this industry.
Ed, we thank you so much for all your time and all your reporting. I hope you have the best long weekend ahead of you. Now, joining us with more on everything AI is longtime tech entrepreneur Arjun Sethi. He is the chairman and co-founder of VC firm Tribe Capital. He is also the co-CEO of Termina.AI. Thanks for joining us, especially because your firm has invested in XAI. So you have a very close view on how these LLMs have been developing and the competition among them. Very curious about what you think about this latest OpenAI funding round and the corporate interest around it.
Yeah, thanks for having me. I think the right way to think about it is the corporate interest, especially from a company like NVIDIA, is more about if you take a look at their portfolio diversification of where their revenue comes from, the fastest growth in the future is going to come from companies like OpenAI and the types of developers that they're going to support moving forward.
So go ahead, please.
Go ahead. So what that means is that NVIDIA is not just a hardware and company, it's a hardware and software company. It's attracting developers, and they have to partner with other developers and other companies similar to OpenAI. So OpenAI being the biggest, it's a foregone conclusion that they have to partner with them in some capacity, similar to Apple.
So given that you have invested in XAI, draw me a map a little bit on where different companies are going to play in this ecosystem.
So right now we're talking about LLMs, we're talking about foundational models. What we're not talking about is similar to the past where you've built the foundation, you've built the infrastructure, and the next layer of application companies are being built, which is essentially what are the next trillion-dollar companies that are out there. So OpenAI being one foundational, XAI could be another one that's foundational, Anthropic is another one that's foundational, but they're supporting the next level of developers. You take a look at what companies are doing today, similar to what a lot of venture firms are trying to figure out, which is how do you leverage AI to be more efficient, or how do I save cost or increase revenue? Today, with the aspect of what you see with OpenAI, is that every single company in our portfolio is leveraging these prompts and leveraging AI in some way. And so what is the net effect? Is that they're being 25 to 50% more efficient. It's not 10x yet. We're working our way there as these companies get larger and they build better developer tools. But that's an increased efficiency, and that has a high amount of impact. So any corporate interest that's coming into OpenAI is looking at that not just for themselves, but they're looking at that for the future of their business, keeping the business that they have with their developer community, and making sure that more of these developers are going to continue to succeed on their platforms, because that's what's going to continue to drive their business. So for NVIDIA, it's a lock-in because they have software plus hardware, and that is the de facto monopoly today.
Arjun, can you talk to me a little bit about valuation here? You have a report out from your company about what you call a weather report, about the supply dynamics in private markets. When we talk about OpenAI, we're talking about a valuation that could be over $100 billion, but really there are only a handful of companies in the world with that kind of valuation underpinning them. So what else are you seeing in the private markets right now?
So, the way to sort of think about private markets is worldwide. So let's take China, India, US, and then Latin America as a whole. US and China has sort of dominated valuations for a while, and a lot of capital has been flowing into anything that's software and tech enabled. The next phase of that was anything that's software, tech enabled, and the label of machine learning and AI. And so that's where a lot of the capital is going. So far, most of the investments in the private world that's been going into AI has been coming from corporates. It hasn't been coming from venture capital. Venture capital traditionally is invested in anything that's vertically integrated or vertical application, which basically means like, how do you leverage AI into a fintech? How do you leverage AI into healthcare, et cetera, et cetera? Those are where most of the investments are going in. So valuations for those types of opportunities in the beginning are really high. Then midway through the cycle, it becomes low again. And then what you'll see is something that's much more intrinsic versus options value related.
When you think about the global view here, there's a lot of concerns in the AI world about that competition towards AI spending, towards AI development between the US and China. What do the dollars say?
Well, most of the dollars today are going towards development in the United States. That's actually very, very clear. That said, what you have to look at in terms of what investments that happen outside of the United States, especially in China, was essentially for image recognition, anything that was related to cybersecurity or surveillance. And so that's how they had spent the majority of their capital, let's call it over the last 5 years. And we've spent that plus more over here that's been around AI, AGI, machine learning. So we're much further ahead for now. And you can see that in the types of companies that are being built, the types of products that are being built for every single vertical. So I always go back to cybersecurity, healthcare, financial services. You're going to see the first input there. You could call it GDP per capita growth, and then cost. So those are the bifurcations between the investments that are really being made. And then all the hyperscalers that are out there, they are going to benefit from all of this because you need more compute, you need more space, you need more training, you need more inference, which ends up being a net benefit for all the companies that are part of that stack.
Speaking of hyperscalers, I'm glad you brought this up. Of course, we had NVIDIA earnings this week. The initial reaction was disappointment. But something that struck me on the heels of NVIDIA earnings is even when you saw a day of earnings where the stock was down right after, you saw every other company in the Philadelphia Semiconductor Index immediately had the reaction in the opposite direction. There is still love for that AI boom. Is this, Arjun, because there is such a lack of investment opportunity? You mentioned a little earlier that a lot of this venture investment is actually coming from corporations. So what does that mean in terms of exit opportunities? Are there fewer in the future than meets the eye?
Yeah, so there's multiple questions there. I'll take a step back. So you look at NVIDIA, and the way in which you should think about it from our framework is that they have clear product market fit for hardware that they've built, and they have clear product market for the software that enables their hardware. A lot of the other companies that compete with them today don't have that. And so they're racing to be able to lock in developer interest. So all of them, they're racing to be able to try to commoditize that part of the stack. That hasn't happened yet. And I think that's a key point. So when you think about year-over-year growth of what NVIDIA looks like, if you think about year-over-year growth for the other companies that are on top of their stack, namely OpenAI, xAI, Anthropic, et cetera, all of these companies have to rely on that. And then you're going to look at the next part of the stack, which is what do all the developers do? How do they train, and what are the products that they're going to use beyond just open source? They still have to work off of hardware. So I think of this very similar to when Apple came out. Everyone had made a bet that Apple's devices are too expensive, it's going to be commoditized, and all of the other people are going to come in and compete with them. And then you had software developers moving over to Android, and you have roughly about a 50-50 market. You don't have that today. You don't have a clear competitor in hardware, and you don't have a clear competitor in software. So the question you have to ask is, at what point does that start diverging in terms of overall demand for processing and demand for inference and demand for training? And today it hasn't stopped. I do believe it will, and it will sort of level out at some point, but we don't know if that's 6 months from now or 2 years from now or 10 years from now.
Arjun, we have to leave it there. That is Termina.AI co-CEO Arjun Sethi. We appreciate having you today. Have a great long weekend. And coming up, we're going to switch to retail. Lululemon falling today. We're going to discuss why yoga pants sales are sagging. This is Bloomberg. This is Bloomberg Markets, and I'm Sonali Basak. It's time now for the stock of the hour. Like the S&P 500, Lululemon has turned negative in the session. The company lowering its sales and profit outlook for the year. The CFO saying the cut was due to, quote, uncertainties in the economy, including a shorter holiday season and the upcoming U.S. elections. Now, shopper preferences are also moving towards styles that are looser than the leggings Lululemon is known for. Comparable store sales fell 3% in the Americas in the second quarter. For more on this, we're joined by Poonam Goyal from Bloomberg Intelligence, who watches this market oh so closely. How much is competition a problem?
Competition is a problem, but that's not the problem here. The problem is the product. in the women's category. They clearly blamed and have been blaming for the last 2 quarters that they don't have the right patterns, the right silhouettes, the right colors, sizes in their women's business. And as they work to fix that, we will start to see trends improve. But it's a wait and watch show at this point.
Well, it's fascinating because you've really seen the stock feel a brunt of the pain throughout the course of the year. It's down now almost 50%, including what you're seeing from today. So what is it going to really take for them to turn around, and will it require some costly investments?
It shouldn't require any costly investments because it's really about the product. And the product innovation pipeline that they have is already in place, but it's about making sure that they have more smaller sizes, that they have more colors, because that's what the customer wants. And then also that the macro doesn't slow any further, because I do think there's demand interest in the product and in Lululemon. That's still very, very high.
I'm going to pretend to be Matt Miller for a second here, because if he were sitting here, he would ask the question about GLP-1 drugs and what that really means for the potential for people to get out there more and work out, to buy clothes like Lululemon, to get healthy and fit once again. Do we know whether there is a new preference now in the wake of kind of this new GLP-1 wave?
Yeah, I think people still want to be out and about. They still want to be fit. They still want to look good. That's all still there. But people are also more balanced in their wardrobe, right? So we do have to remember that we're back to an almost or a normal environment now where you are looking for work clothes. You are balancing your closet with work, lifestyle, and gym. So it's not all gym anymore like it was 2-3 years ago.
Right. You and I were kind of joking a little earlier. I have swapped my legging purchases this year for cowboy boots instead. People are out there having fun again. Does that mean people want to see more from Lululemon than just athleisure? You think about some of those other brands that have moved kind of in the other direction towards athleisure from offering other things. You know, a lot of men's clothes from Lululemon people wear as everyday work clothes sometimes.
Yeah, they've actually been doing this for a little while now, where they've branched out into adjacent categories within apparel. So whether it's their jackets, whether it's looser tops, and even looser pants, they are making inroads into getting their assortment to be broader. But make no mistake, the leggings, the yoga wear, that's still the core part of their business.
Poonam, we thank you so very much for your time. That is Poonam Goyal from Bloomberg Intelligence, of course, on one of the bigger stock stories of the day. Now, coming up, sources tell Bloomberg that Intel is considering seismic changes in the wake of another grim earnings report. We're going to bring you those details next. This is Bloomberg. Bloomberg Markets, and I'm Sonali Basak. A Bloomberg report says Intel is weighing options, including splitting off its foundry business. Intel's longtime bankers, Morgan Stanley and Goldman Sachs, have been providing advice on all the possibilities, which could also include potential M&A. Back in April, after its first quarter earnings report, CEO Pat Gelsinger spoke to Bloomberg about his positive outlook at that time.
We delivered a solid Q1, right? We met on revenue. We beat on earnings, a bit tepid in the first half, as we said, but we see a lot of improvement as we go through the year. And with that, obviously, the foundry business, as I would say, we're going to see progress on the foundry business every quarter from now to the end of the decade.
Yet just last week, Gelsinger told a conference that it has, quote, been a difficult few weeks, and the market didn't respond positively to the company's plans. But here with more on the Intel news is one of the reporters behind the Bloomberg report here, and that is Bloomberg's Ryan Gold. And I want to talk about really how we got here for a second, because there were rumors here that perhaps Intel was seeking financial advice in response to potential activist concerns here. What are you hearing?
Yes, I mean, those reports finally came out, I guess, almost a week ago, and there was a sense that they were taking counsel on potential activist defense. I think just given where Intel is, those reports weren't exactly surprising. But from what we could tell, talking to sources, where those came from weren't exactly clear. Because yes, while the company is vulnerable, I mean, just look at the tone that Gelsinger struck yesterday at the Deutsche conference. It wasn't exactly clear how an activist could come in and create an immediate impact or upside, because none of these options that we kind of lay out in the story are very, very easy to achieve. And so if you're looking at where the stock went this morning, you probably think you may have missed out somewhat. But again, this is a very long-term project.
Yeah, this is a stock that's been down 56%, and to your point, it has been rallying today. So maybe the activists might be missing the opportunity, especially when they're proactive on their own. But perhaps with the stock declining more than 50% this year, you can call its entire shareholder base activist, can't you? What would fix the problem?
I think it's one of a couple of things. I mean, we lay out in the story this idea that they could spin off product design from its foundry operation. Foundry is a massive cash suck for any kind of semiconductor player. And to think that that project has been so central to what Gelsing has been trying to do in the turnaround. Let's not forget he was brought in to essentially fix some problems that his predecessors had sort of laid out under their watch. Doing a semiconductor fabrication plant takes years. It costs like $20 billion to build just one. It requires a lot of subsidy in many cases. And one of the things that many of the sources that we're talking to are mentioning as well is Intel still hasn't seen a dollar from any of the CHIPS funding that was awarded to it back when Biden went to Arizona earlier this year. And some of these scenarios that we lay out in the story could have an impact on how that CHIPS funding comes to.
Absolutely fascinating. We have about 30 seconds left here, and I want your opinion here on how much you think that more private investment interests could be drawn to this stock after you've seen them strike deals with Brookfield and Apollo.
Yeah, I think the institutional investor question is a massive one. We have been told that, Intel could think about just ballooning out that kind of private institutional investor interest. 10x what it did with the Brookfield and Apollo projects in Ireland and Arizona. But again, I think it's probably too soon. Something less drastic will happen.
Ryan, we thank you so much. Very excited to have you covering tech M&A for us over here. Of course, the Intel story will keep him busy for a very long time. Now, I'm Sonali Basak. That does it for Bloomberg Markets. Keep an eye on this choppy trade throughout the day. This is Bloomberg.